Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
Hey, that's right. I am Mark Eitel, host of the Mr. Mortgage Show. And text us your questions or call in with questions to 561-291-8569. Dom is with me this morning, manning the board, and he will handle your questions for you. So another happy Saturday here in my world. I hope it's the same in yours. But we are always excited to come to you on a Saturday morning and appreciate you spending some of your weekend with us. So as always, we kind of cover some key topics in the mortgage and real estate world to start the show. And, I don't know what the term is, 900-pound gorilla in the room is interest rates. And I'm going to go ahead and talk a little bit about rates and then talk about why they are maybe not as important as we make them out to be, or at least in the current environment, they're not as important as we make them out to be. So as you remember from last week, we talked about the Fed made the quarter point move, and there wasn't a lot of activity in the mortgage interest rate market, as the overnight rate that the Fed controls has not a direct effect on mortgage rates anyway. However, it does establish a trend and overall rate environment movement, if you will. So everything was calm, and we were bouncing around in that trading channel that we've talked about for weeks now. But this week, early in the week, I think it was on Tuesday, the Fed came out, the chair, Jerome Powell, and said he's prepared to move more aggressively if necessary. And that caught everybody off guard because there's a couple different ways that the Fed controls interest rates in relation to inflation, and then one of them particularly controls or influences mortgage rates, and that's the balance sheet runoff. So nobody really knows what he meant by that. Is he going to raise in larger increments more often maybe than he originally had thought? But nonetheless, that kind of threw a little bit of a ripple into the market, and we saw rates bump up a little bit this week. And I stress little bit because these moves are incremental. They're not big jumps. And I want to encourage everyone to take the headlines with a grain of salt, because one of the headlines that I read yesterday was interest rates soar. Did you hear that? Soar to now more than 4%. Well, I don't know about you, but when I think of the word soar, I think of, like a launch, like a big jump upwards, like a plane taking off, or a big bird lifting off. The rates, as we talked about last week, I don't have the last week's chart in front of me, but I think it was 4.19 or 4.23, somewhere right around there. The big soar that the LA Times talks about was all the way up to 4.42. So that's not a soar, that's a little bump. And it's all anticipated. We all knew that we were going into an increasing interest rate environment. So don't read the headline, chuckle at it if you must, but then read what's underneath the headline, because often that's where the real data lies. So I was a little disappointed by that. A lot of people seem to be jumping on the interest rate bandwagon. And I know for me personally, because I'm in the business and I geek out on this stuff, I watch the real-time movement of rates all day, every day. So I'm watching candlestick charts and looking for crossover patterns and waiting for an inverted yield curve. But none of that really matters. I mean, you still have to wake up, you still have to go to work, you still have to put gas in your car, buy groceries, and make a house payment. So the difference between an interest rate of 4.25% or 4.5% is not going to change your life, and it certainly should not deter you from making the decision to purchase a piece of property. And that's where I see people getting hung up. It's almost like we watch the weather during storm season, and we're glued to that television for 18 hours, and the weatherman rolls up his sleeves and pulls his tie off, and he's explaining. And I'm making the hand motions in the studio. Dom's laughing at me. I look like I'm landing an airplane. But the weatherman makes the big motion with his hands and tells us the trough is going to pick up the storm and sweep it away, and we're all going to be okay. Well, we're all stressed We're all nervous as hell sitting at home watching the weather. Is my house going to blow away? Is it going to rain? The weatherman's having a blast. He's geeking out on the technical side of it. That's me with interest rates. But you, as a consumer, needn't concern yourself with the little tiny incremental rates. And I want to share a story that happened this week and really set it home for me. Was I was in the office and we had a pretty substantial rate move one particular day. And at the time, it was right around 60 basis points. And it hadn't changed any pricing in the mortgage market. It was just the real-time intraday movement. And by the end of the day, it had moved back to where it started. So none of this means anything except for my point in don't get caught up watching the minute details, just look at trends. And one of my partners, who is far smarter, and it's not fair because she's also more attractive than I am, so it's not fair that she's pretty and smart, but nonetheless, she, we were having the conversation and I was geeking out on how significant the move was, and I was excited by that because of all the ancillary effects and, what's causing it. And she said to me, well, Mark, that's super exciting, but what is that going to do to the interest rates? I have to lock these loans. Does it make sense to wait until tomorrow, or what are we talking about? What's the best case scenario with this move? So I quickly did a little math, and I'm guessing if we would have continued the rest of the day with that trend, we might have picked up 1/8 of a point. So 1/8 of a point on the interest rate for the loan that she was talking about locking for me was $13. So here I am, all excited, and I'm geeking out on watching the charts, and I'm thinking, all right, it's a great lock environment, I'm talking about $13. And somebody sitting at home who's waiting for the rates to fall back in the 3s or the high 2s before they make a decision. Well, first of all, that's not going to happen anytime soon. And secondly, all you're doing is you're stressing out over the details, and you're going to miss the opportunity that's in front of you, if there is one in front of you, because interest rates are going to continue to trend upward for the near future. So I just share that because I think the magic in all of this is look at your budget, not necessarily the rate. And let me qualify that and say everybody's entitled to the best rate they can get the day they lock. Absolutely. I will never, never, never argue that. It's a practice of ours. We pride ourselves on always locking the best rate of that particular day. And me personally, I try to even time those little 1/8 point moves for my clients, but I don't share that with them because I don't want them to get caught up in it. But my point in all that is, yes, go after the best rate possible, but don't wait if you've got a good opportunity in front of you. Look at your budget, not the rate. Now, we shared a story last week where a gentleman was buying buying a property with an FHA loan, and he was putting 3% down, and his payment was working out to be less than the rent payment on an average 3-bedroom, 2-bath house. So if that guy would have been hung up or wrapped around the axle over, should I hang in there and see if I can get a better interest rate, he wouldn't have made that move. So he was concentrated on his budget, and he's going to put his family in the house they want to live in, and his kids are going to go to the schools that he wants them to go to because of this purchase. So think about budget, don't think about rate, and don't beat yourself up because your neighbor got a better rate 6 months ago or last year. I'm working with a self-employed borrower right now who, because of the way they file their tax returns, needs to use a bank statement loan program. Well, the bank statement loan program has a slightly higher interest rate than a conventional loan, which has a slightly higher interest rate than an FHA loan. And this gentleman was at a beer and barbecue party this weekend, and last weekend rather, and I talked to him about this Monday. He shared with his friends how excited he was that he was buying a house, and naturally the conversation, as it always does, turns to, what rate are you getting? And he shared his interest rate, and his buddy said, man, you're crazy. Why would you do that? I bought last year with an FHA mortgage, and I got an interest rate of this. And the two things to keep in mind in that story is last year and FHA. Very different times, very different programs. Luckily, this guy's smart enough not to let that interest rate be the only thing that governs his decision, and he's looking at his budget, moving forward and capitalizing on the opportunity. So, hey, that's the break. When we get back, we're going to dig into your questions. Shoot those questions to us, 561-291-8569, or visit the web, www.mr.mortgage. That's mr.mortgage. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right. You heard the man. I'm Mark Eitel. This is the Mr. Mortgage Show, and you can get a hold of us here in the studio on the Anytime hotline at 561-291-8569. That's 561-291-8569. Dom, my producer, is manning that phone line, and he'll get your questions over to me. Also, too, I call that the Anytime hotline because it pushes to my office during the week. So if there are questions or comments that you have and you want to reach us during the week, that number also rings at my office Monday through Friday. So 561-291-8569. Actually, too, I've even been known to spend the rest of my Saturdays in the office after the show, but I'm going to try to sneak out and play a little golf today. So anyway, you can also shoot questions through the website to the Contact Us link there at www.mr.mortgage. That's www.mr.mortgage. So I just I shared that in the opening segment, budget versus rate, because I think too often we get caught up in that vanity metrics of interest rate, and we're influenced by the people around us who, I'm sure, to use the guy at the barbecue, I'm sure his friend was well-intentioned and thought he was doing him a big favor and sharing an opportunity with him. And I know it wasn't nefarious and he wasn't busting his chops, but the reality is that sitting down on Monday, we discussed the options, and for him to qualify for a conventional or FHA loan would require him to either refile his tax returns or wait until he filed his tax returns differently moving forward, which either way would have resulted in him paying more taxes and missing the opportunity that was in front of him from this particular purchase standpoint. So we sat down, we chopped up the numbers, and he's looking at budget and rate, just not getting hung up only on rate. So that's why I shared that story. Only because it's becoming more and more of a conversation. So as promised, we're going to dig into the part of the show where we're answering your questions. I know Dom is giving me the signal that one has come in, so I'm going to throw it over to Dom. What do we have?
Brandon from the text line asked, my dad has offered to sell me his house for the same amount he owes. Can he add me to the title so I can refinance it into my name only? How special is that? You know?
Right? Dad is looking out for Brandon. So Brandon, if I'm understanding you correctly,